Hi, this is Peter Davis from Jigsaw Trading. This is a video that was sent in by a customer who had a few questions about the action last Friday. Now note that the time is 12:07 on here, we just can't see the one on the 12. Now what's interesting with the ES right now is that the market's really thin. The depth is mostly in the low hundreds, and it has been that way for a while, and that means a few things. First of all, we have more volatility, which means more profit potential in ticks per trade. But that volatility also means we have more risk per trade and we need wider stops. And when it's thicker, the ES is capable of turning around just on a single order flow event, but that isn't the case for these thinner markets. So this is a good opportunity to look at reversal over a range of prices. Now the first thing we can see is there's a lot of buying on the recon tape. There's a lot of buy pressure there. All the large size trades are on the buy side. And we can also see that we've just gone through the top of a high volume area, which location wise gives us a good cause to look for a reversal. Now look at the size trading into the offer. We can see, as I was talking earlier, as we went up through 40.50, we had 1,497 contracts traded. If we look at 41.25, we can see 800 contracts traded. So we can see there's a lot of size going into the offer side. So the offers are actually adding as we're trading in. There's another 1,000, and if you look down, we can see that that is exceptional size, and it is something we should pay attention to. If we look up at 1942, we can see 1,100 contracts bid. Now this is interesting because, like I say, this is a thinner market, and it is a thinner market basically because a whole bunch of people, presumably, but we don't know 100%, market makers and possibly some of the HFTs have basically disappeared because they feel it's too risky. So if it's a thinner market, we always think about thinner markets that it's not as safe to spoof close to the inside on a thinner market. So whereas we'd expect those contracts to pull out of the way if the ES was thicker, we all should really consider that those offers there, are actually real. So let's just have a look as we get up to that area and we trade into it. Okay, I've just moved a few minutes forward. Now we're going to see at 41.50, we can see again a lot of contracts trading into 41.50. Now again, if we think about a more volatile market, being maybe 1.5 points above the top of the high volume isn't a huge amount. It's not far. We're not far from the top of the range. So typically, if we get a head fake, we'll poke out to the top of the range, and quite often we'll see the absorption on the offer side. So let's just see how we trade. Okay, so it's 1,100 contracts. We've added over 800 contracts to that now. There's not much on the sell side. We still don't have any large sellers on the tape though. We can see they're still holding 41.50, and this is what I mean about, we've seen them hold 40.50. We saw the size go through there. We've moved up a little bit. We see the size hitting in there. There's absolutely no doubt that the offers are stepping up and absorbing some selling here. But what do? Do you get in now? You could get in now. I mean, you could see that 41.50 and say, well, we're above the range. I'm going to get in at that point. You could wait to see if it hits 42. Or you could wait to see if a bit more size comes in. Now, normally on the ES, I wouldn't really wait myself to see the size come in because normally we don't have these big ranges, so you're giving up a few ticks when you see the size come in. With this market though, because it's so much thinner, that seeing the size coming on the sell side gives you that additional confirmation, and that's a good thing to see in these cases. So again, we can see the 42, the 1190 all traded. We've poked through 42.25. We still don't see anything on the buy side, but we know that the offers have absorbed a ton of contracts there. Again, we can see they're adding again here. And again, it's just a matter of seeing these things come over a period of time. So as I say, if you see the sellers step in now and you see a few ticks down, you've still got plenty in a trade to take off the table. You don't have to worry about giving up 4, 5, or even 6 ticks with the seller, with the sellers coming in, because you've probably got a 20 or 30 tick swing to look at. Okay, so we see a couple of big sellers. Let's just watch on the tape now how the sellers come in and how the market reacts. We know we've seen absorption. We've not seen this kind of selling activity for a long time. Didn't see it all the way up, seeing the sellers come in like this. Sure, they could, they could get stuck. They could get stopped out, and you could see absorption on the buy side. But already that's giving you some inclination there is actually some selling there, and that's probably the guys who sold on the offer trying to nudge the market down a bit. And again, we see some more sellers coming in. Obviously, our area of caution really is as we get back into the top of where the range was, about 1940. But again, the question was, what are we seeing there? The question from Stephen was, what are we seeing there? Are we seeing buyers run out of steam? Well, really, we didn't see the buyers run out of steam. We saw the buyers continue buying. But what we saw is the offer stood up. But more importantly as well, it was at a location. It was as we'd gone through this area of high volume. So I think we had a combination of two things there. We had basically the buyers knew they were stuck. Basically, the offers stood up over a range of prices and absorbed the buying. The buyers knew they were stuck and had to unwind. And also, we had a good trade location. So these kinds of things, you'll see this all the time, buyers getting stuck. And you will get a bit of a reaction, but you'll get a better reaction if you're in a good trade location. And again, we can see we drop further and further down. We can see on the sell side on the tape just lots and lots of red and lots of selling on the way down. Now the blanks on the right here, as you know, the current trade's clear when we tick back. So basically, when you see the blanks on here, it just means that we tick back and didn't trade. So that's indicative of a good rundown. When you have a strong rundown, you get a lot of these areas where you've got the blanks. But basically, just a good reversal, good rundown. No reason right now to kind of exit the trade, certainly from a trade location point of view. So let's have a look at what went on afterwards. Okay, so moving on to just after 1 o'clock, we actually moved down to 36.50, and what we're seeing now is the market moving up and having a retest basically. But if we think about where we are, the last trade or the last potential entry or the last reversal was basically a head fake. We'd moved out from the high volume area and then we'd move back into it. Now we're moving towards the top of the high volume area again. We've already got a downward bias. We should hit the bottom of the volume area, so we should already have a downward bias. But there's a couple of things to keep in mind. First of all, we don't have a good trade location because we're not at or through the high volume area. We can see the volume now extends up through 41.50 because of the trading that we did earlier on. The other thing is it's lunchtime and well into lunchtime. I know it was 12 something earlier, but it's well into 1 o'clock. It's Friday afternoon. This is not an optimum time to trade. We can see a little bit of a tussle there, a little bit of a pop there. But basically, generally speaking, when you get to this time of day, we run out of steam. So what we're seeing is kind of a more lazy reversal. So we've not seen it in a brilliant location. It's a bit more of a lazy turn. Not as good an opportunity, in my opinion. I mean, you can see the sellers starting to hit it. You can see the sellers starting to knock it down, but it's much less clearer. And that's why, if you're trading from maybe 8 a.m. Eastern time to 11 a.m. Eastern time, that's kind of your optimal times to trade because there's a lot more people engaged and there's more swift reactions. As you get into lunch times, you see the reactions, but they're a bit harder to read because there's no real pace behind them. We don't really have that aggressive selling. So while we do see this market start to sell off, it's certainly not something I'd be that interested in trading personally. So Stephen, I hope that answers your question. It was some good insights from your email. You said it's just the second day you've been using the Dome, so I think you had some good insights, and I think it's a really good idea to make recordings like this and review them later. Just bear in mind that the market's not going to have the same pace all the time, and also bear in mind that the volume, where you're on the volume profile in terms of trade location, is going to make a difference. There's other people that are trading at these extremes. If you're not at an extreme, you won't have so many people coming in. Anyway, I hope this video helps, Stephen, and if for anybody else that watches it, I hope it helps too. Thank you.